understanding what the impact to a business is and being able to adapt to it quickly is going to be essential. So if you're not prepared for that, I wish you luck because it's not going to be pretty.
Welcome back to CFO Weekly, where we're talking with financial leaders about how to build efficiency in their teams, create time for strategy, and ultimately get results. This podcast is brought to you by Personiv, the trusted leader in finance and accounting outsourcing for over 30 years. See how Personiv's customized solutions can help you streamline your operations with teams that start as small as one. Visit the website at personiv.com to learn more. I'm your host, Megan Weis. Let's jump right in. Today, my guest is Hemant Kapadia, a visionary finance leader who has been at the forefront of using technology to reshape how organizations plan, forecast, and make decisions. From his early days as a CFO to his current role helping enterprises unlock the full potential of data and AI, Hemant has seen firsthand how finance is evolving from a backward-looking function to one that anticipates and shapes the future. Hemant is Anaplan's Chief Financial Officer and leads Anaplan's various traditional finance functions, as well as procurement and real estate. In addition to delivering against Anaplan's own growth goals, Hemant leverages his firsthand Anaplan expertise to help the company's CFO customers deliver outsized outcomes within their respective businesses. Hemant previously served as CFO at Sirius Computer Solutions for nearly 3 years. There, he helped drive the business to more than triple equity value by driving revenue growth, M&A, margin expansion, and relentlessly focusing on cash flow. With over 30 years of experience with both public and private companies, Hemant has held CFO positions at Markandy Inc. and MEMC SunEdison Semiconductor. He currently serves as the executive sponsor of Asiaplan, an employee resource group at Anaplan, representing employees from the Asian community. Hemant holds an MBA from Rensselaer Polytechnic Institute and a bachelor's degree from the University of Tennessee. Hemant, thank you for joining me today.
Thank you, Megan, for having me.
Yeah, so to kick us off, what was the first moment you realized that traditional financial modeling wasn't enough and that AI could fundamentally change how businesses plan for the future?
Look, I think COVID was an interesting time frame that really brought to the forefront. There's a lot of uncertainty in your top line, will your employees come to the office? Will you be able to get goods from various locations and shortages and otherwise? And just being able to dynamically adapt and understand the impact to your businesses was really important. And I was in the tech space at the time. And so that has obviously transitioned to, our current environment, which is just as equally dynamic today with tariffs, trade wars, foreign exchange, what's happened with AI, all of those things are factors that are leading to a lot of uncertainty in the business environment. So that's definitely one thing that we're seeing. And, if I take a step back, I have the advantage of being at a company that actually is one of the leaders in, as you mentioned, one of the leaders in planning, not only in the office of the CFO, where I am interested in, but more broadly across the enterprise, whether it be supply chain, sales, or in workforce, and being able to connect all of that together to understand how a business can plan enterprise-wide.
And your perspective as a former CFO gives you a unique vantage point. So how did those early experiences shape the way you think about scenario planning and its importance in strategic decision-making?
Yeah, I'll take actually a little, rewind the clock a little bit more. I think it gives a little perspective on my mindset. So I actually was an electrical engineer for the first 10 years of my career. And so obviously a lot of math is involved there. A lot of process, a lot of critical thinking from that standpoint. And then as I transitioned into the finance realm, so I was at GE at the time, and I was at some of the lower margin businesses, which ultimately allows you to refine your skill set as it relates to making sure you deliver on the investments that are being made, because there's not a lot of margin in the business to ultimately support investments that don't necessarily work. And you're squeezing every penny out of the ecosystem, if you will. And so my engineering background, being more process-oriented, having grown up in low-margin businesses, has given me that viewpoint of I want to ensure that every investment that the business makes has a grounded path to delivering an outsized outcome. And actually, we can measure what that outcome is. And so, again, getting back to that connectivity across the business, being able to measure, having the metrics be consistent is super, super important.
And as AI continues to advance, it's transforming how finance teams approach forecasting and risk management. What are some of the most powerful shifts that you've seen in practice?
Obviously, you can't open up an article today without reading about AI. And I would say that our solution sets and even some of the solution sets we're employing are leveraging a lot of LLMs, whether it be on time series forecasting capabilities or some of the predictive aspects of understanding our customers' usage behaviors and the like. That would be more on the front end of the business. But I think on the back end of the business is equally impacted from a standpoint of there's an efficiency aspect on not only engineering, coding, especially with some of these more sophisticated LLMs and solutions that are out there, should be driving 20, 30, 40% improvement in not only the ability to develop new software solutions, but the QA aspect of it doesn't have the human bias towards the author of the code. So it's very pragmatic. And then being able to release software also should be much more efficient. So I think there's a whole dynamic within the development cycle. And then on the back end, from a G&A perspective, I think there could be opportunity from a cost efficiency standpoint. But the way I think about AI internally, there will certainly be a cost element to it, but I ultimately want the business to be able to get to a better decision faster and leverage the capabilities that we have on our platform, Anaplan, but also to dovetail that into whatever solutions can I plug in that allows me to make those decisions and those connections a lot faster, because it's that network effect across a business that really unlocks a lot of capability and a lot of value for the ultimate shareholder.
And just really quickly, tell us a little bit about Anaplan.
So Anaplan is a enterprise decision-making platform. So I say decision-making as opposed to planning platform because planning really doesn't capture the full essence of what we do. And so we have a unified platform which not only serves the office of the CFO through financial planning, consolidations, also from a sales, forecasting, territory and quota, incentive compensation, supply chain, from supply planning, demand planning, summer planning, et cetera, to also workforce. So your staffing, being able to dynamically model it, ups and downs, and then seeing what the financial impact of that is. But you can imagine when you connect all of those domains together, you have a solution that can very dynamically estimate and plan your business in real time. And I come back to decision-making because when you're able to see the impact of frontline of your business, something changing in your pipeline or in your sales forecast, and understand what the ripple effect is for your business in a real-time manner from a revenue and EBITDA profitability cash flow, you can make decisions on if you're going to lean into new investments, if you've got the capacity, or pull back on others if you've got a shortfall coming to your particular quarter, month, quarter, or year. So that allows you to run your business with a much lower safety factor and still feel comfortable with hitting your outcomes. So to boil it back down to, we're a decision-making platform that is enterprise scale and enterprise resilient.
And does it just sit on top of an ERP?
Yeah, so that's a great question, Megan. So we interface with all the major ERP systems out there, whether it be Oracle, SAP, or Workday. And the way we think about ERPs is that they are transactional systems. They will execute on a particular function or action. However, the true value in a business is being able to understand what actions you should be taking to optimize the business outcome. So leveraging that data that's in the ERP or in a CRM or in a HCM for workforce and being able to bring all of that data together on a unified platform is really where we've seen a lot of value for our customers.
And great insights are only as valuable as their execution. So how do you ensure that the outputs of scenario planning are not just modeled in spreadsheets, but that they're actually communicated, understood, and acted upon across business functions?
I think what we try to do is democratize data across a business, obviously with guidelines for who has access to what data, sensitive or otherwise. And I think this really comes down to having alignment across functions. So if sales is making a decision on a promotion, it should be tied to what a supply chain buyer is actually communicating with the supply base. And then obviously the finance team would need to understand what's the implications on working capital or the top line forecast or bottom line forecast for that matter. So having that connectivity through the business and having everyone work off the same set of data and same set of assumptions is absolutely essential. Because if you think about the impact of creating buffers through an organization, if you've got a salesperson that will say, well, I'm going to add a 20% buffer on my forecast because I want to make sure supply chain buys enough. Then supply chain says, well, I'm going to put a buffer because I don't want to stock out. So they go back to the supplier and supplier says, well, I need to put in a buffer because I don't want to have a shortfall. So if you think about all of the inefficiencies that's accumulated through the system, when you're running off the same set of data and you have confidence in that data through an enterprise, you can actually run much more efficiently. And at case in point, it's an interesting example of a customer. We have a very, very large semiconductor design house that farms out their production to various fabs across the world. And they deal with the fabs making the chips, the packaging companies that put them into subassemblies, the board manufacturers, the chassis manufacturers, and ultimately the installation at data centers and the like. And so when you imagine the complexity of that entire supply chain and to do that in an efficient manner, it is no small task. And our customers been able to grow their revenue multiple times over a very short period without adding materially to their operating team. And that's a testament to having everyone looking at the same set of data in a consistent manner. So there isn't redundancy in the network within the organization. So I think that in and of itself is an example of a case where that connectivity is super powerful and it's led to outsized returns for their shareholders, of which I'm actually one, and you might actually be one too.
That's amazing. So implementation is where many organizations stumble. So from your experience, what are the most common pitfalls that companies face when introducing AI-driven financial modeling, and how can they avoid them?
I think it starts with having a clear understanding of outcomes. So what are you trying to achieve? And then having a team that's actually aligned with delivering those outcomes. I know that sounds pretty basic, but many times the implementations of new solutions becomes a second or third job done after hours. And that can work, but the probability of it working is much lower than if you have a focused team. And if the project is important enough to a business where AI or any implementation of a major system should be driving an outsized business outcome, you should have some element of a dedicated set of resources. I think the other part is making sure that all the parties involved, because generally there's a third party, call it system integrator or some professional service organization, is also at the table hearing all of these messages at the same time. Then that leads to a regular cadence of open communication to make sure that everyone is following up on tasks. So call it typical project management, but you'll be surprised how often it doesn't happen. And one group feels the other person should be doing it and vice versa. And so that is as super, super important. And we have a program called Value Assurance that we run with all of our new customers to ensure that there is that alignment through the organization. There is not only from a resourcing standpoint, but also the outcomes that the business is looking to achieve. Because identifying that early on is so important to make sure you don't get to 75% complete and then have to restart the project. That does not serve the champion for the project or either of our companies in any way. So getting that alignment is super, super important.
And looking further ahead, AI-driven planning is starting to influence investment and capital allocation decisions. How do you see that continuing to evolve over the next few years?
It is quite remarkable the amount of money that is being allocated to AI. I think there's an element of FOMO, fear of missing out, especially the large hyperscalers, which we'll see how that pans out. It feels a little like the dot-com era right now, but I would say the investments that we're looking at internally are focused on what I mentioned earlier, which is there's an element of driving efficiency, but I think it's driving the efficiency of decision-making, which is more important for me. If I can use AI to bring the organization together to where we're making a decision faster about a particular customer proposal or a particular internal development project, fantastic. And that allows me to increase the pace of innovation and the pace of responsiveness with our customers. And so a lot of the development that we're doing internally is really focused on making our customers more efficient from an implementation of AI itself. One solution that we're in the process of rolling out is a product we call CoModeler. So for those that have used Anaplan in the past, you basically build bespoke models or use our applications, which are out-of-the-box functional for any of the domains that are out there. But what CoModeler does is with natural language prompting, you can actually have this solution actually build a model for you to do a particular analysis or serve a particular use case across a business. And why is that important? Historically, it would have taken 3-4 weeks in order to bring a particular model up to operating conditions. And what you can do now with CoModeler is have the guts of the model built in a matter of hours. And then you have a model builder basically do the last tweaks, something with the UX, and you're up and running in a day or two as opposed to in weeks. So that is a huge game changer. And it gets back to the whole vision about AI is just going to continue to increase the pace of development of solutions, development of new practices inside businesses. And those that jump on board with that are just going to outpace the competition. So we're really, really excited about not only the solutions that we're bringing to market from an AI perspective, but the other solutions that we're implementing internally. We've got an entire team focused on internal AI adoption. So we've got AI rolled out across more than half of the company from an LLM and a AI portal, if you will. And we're adding different agents to that on a daily basis. So I'm super excited about what the outcome of that's going to be, not only for the go-to-market team, but in pre-sales, from our customer success teams, R&D teams, and then back office. And ultimately, I think what we'll see is our normal trajectory has been to grow our headcount materially each year and, in the 10 to 15% range. And I think what we're going to see with AI is that curve effectively flatten out to where we will have individuals that will be much more productive and doing much more high-valued work than what you would have had without an AI investment. So I truly see this as a game changer, as virtually the entire market does too. I'm not alone in that.
And when can your customers expect to see that CoModeler update?
Yeah, so we have certain customers going on beta this month, and it will be available early next year for general availability. So it is super, super exciting. And it is just one part of our overall AI portfolio. We have Anaplan Forecaster, which is our time-based forecasting engine, which we've just rolled out a new version. We've had forecaster capability for a number of years now. We've got analysts for each of the domains being rolled out in the next 30 to 60 days, and we're staggering each one. So we've got a finance analyst, a supply chain analyst, and workforce and sales analyst. And you could think about those as being analysts that you would be able to query in the same way that you would ask, let's say, a finance analyst to do a particular analysis on, call it travel expense or OpEx hiring versus COGS hiring, et cetera. You could do a lot of that. But where you really becomes powerful is when you can ask questions which cut across all of those domains, where you can ask a question that asks about, if I were to change a particular sales forecast, what would the impact be to the supply chains and certain suppliers, and the impact factories and the associated workforce, and the impact to a P&L. And being able to do that in a very dynamic way allows you to really make decisions that you couldn't make before. In fact, one of our customers, it's a large automotive customer out of the UK, so you can imagine who it is, actually prices their vehicle options like airlines price airline tickets. So what I mean by that is, so if you imagine the factory produces a vehicle, they'll actually ship the vehicle without a sticker with pricing. And so depending on where that car is going in the world, they will send a sticker to the dealership based on the current foreign exchange rates, supply demand in region, commodity pricing, margin expectations, any transfer pricing requirements. And so they'll be able to do that every 72 hours, whereas they were historically only able to do this twice a quarter. So it's just a different level of decision making, which they just didn't have the ability to do before. That is really, really exciting. Kind of gets back to the conversation about having a connected enterprise planning solution.
And can you share a real world example where scenario planning helped your team navigate a sudden disruption, whether it was in the market, operations, or supply chain?
I would say we've internally just developed a customer profitability solution, which leverages some of our forecaster capabilities we talked about earlier. But it pulls in a cloud hosting data, it pulls in our customer data from sales, and it pulls in our workforce that's allocated to a particular customer. And so with all of those data sources, again, it's that connected nature of multi-domain data sets coming together in one platform where I can look at my profitability of customers in a very dynamic way in near real time. And with that, when customers are up for renewal, I can have a different conversation about, well, where should this customer be priced? Whatever solutions can we introduce in order to change the trajectory of the hosting costs or the support costs or what have you. So it's a completely different conversation that's data oriented. And you think about, there were a couple of customers that just after I started looking at data, I'd sent off a couple of emails, and lo and behold, the renewals are a lot more favorable to us than they would have been otherwise. And so that is the power of having that connectivity and being able to make those decisions in real time.
And you've touched on this a bit, but at Anaplan, you've had a front row seat to how companies are embedding AI directly into their planning platforms. So how does Anaplan help clients operationalize AI-driven insights into their day-to-day decision-making so that they get the most out of it?
I think the CoModeler is going to be a game changer because our customers have internal teams that are rolling out Anaplan and different use cases across the business, or they're leveraging partners or GSIs, if you will. And so one of the truly empowering elements of CoModeler is it's going to greatly increase the velocity at which they can deploy these new use cases. And it will drive them to having that connectivity across the business or within even sub-functions within a particular domain being the office of CFO or supply chain or sales, et cetera. And so that is going to be a huge unlock, but from a cost perspective, because they may not need to leverage professional services in the future. And I think this is really the more impactful part. Having that connectivity and these incremental use cases in place, they will actually be able to make better decisions, and the margin impact or the business impact associated with those decisions is going to greatly outweigh any of the cost benefit that you would get from a pure efficiency standpoint from a headcount perspective. So I think that's really where I see the benefit coming.
And finally, when you look to the horizon, what do you see as the next frontiers for AI in finance, particularly around scenario planning, resilience, and adaptive strategy?
I think it's more of the same. I think it's going to be a faster pace of change in the marketplace, and the companies that are best positioned to adapt to that pace of change in the market are going to be the ones that thrive. And if I just think about all of the things that have changed through this year, there's been different geopolitical issues, there have been trade wars, there have been currency changes, there have been the investment needs in AI. All of these factors are all coming to play at the same time. And there's different laws that are being introduced in different regions around the world. And we live in a global economy. So from that standpoint, understanding what the impact to a business is and being able to adapt to it quickly is going to be essential. So if you're not prepared for that, I wish you luck, because it's not going to be pretty.
Hemant, this has been such a rich discussion about how AI is not just augmenting finance, but truly redefining its purpose. Thank you so much for your time today.
Thank you, Megan.
I truly appreciate the insights you provided us today. And to all of our listeners, please tune in next week. And until then, take care.
You've been listening to CFO Weekly, presented by Personiv. Please subscribe wherever you get your podcasts to hear all of our episodes. Want to learn more? Check out personiv.com. Thanks for listening.